Hello, everyone. I hope you can hear me. I'm sorry, I'm a little bit late today. Just a 1 minute. So yeah, we are here, and I want to welcome you to today's webinar, which is going to be about how the markets really works. Give me just a second, and we will go into it. Please, if you can just yeah, hi. Okay, so you can probably hear me. uh all right, so let's start. So today's webinar is going to be second one in our series, and we will look to the how hello zincs we will look how the markets really works, in my opinion, and what has been a profitable for me so far. So in the first part of the webinar, we will be looking in the little bit in the presentation, and second part we will start in the we will look to the charts, and give me a second. I just Yes, perfect right now. Okay, so let's go. This is just a summary of our common journey. So currently, we have made already this webinar, how to start and finally learn to trade, which we did last week. So if you didn't see it, it's definitely good to go to watch this webinar again, and just to make a notes from there, because I think there is a really important things about a trader's journey and how to start, how to do all the things to make it working for you. Today we will look to the how the markets really works, right? So into the basics of the market mechanics, how the market books the price, who is actually controlling the price. You will definitely hear some interesting informations which you probably didn't hear before. Maybe yes, maybe not. And yeah, and the next week there will be another interesting things, market liquidity, and then high probability levels, Fibonacci tools, and trading style, top-down analysis. And then we will be all putting it together. So I think in the very short time, you will be able to find yourself, your strategy, what could be working for you. Right. So for today, in a little bit in the details, so we will look to the market participants. We will look to the CLS, which is a continuous link settlement company, which is actually the smart money of the markets. We will look to the trending profiles, to the market profiles, which is trend, range, or reversal. The basic of the market mechanics, and what is the external liquidity, fair value gaps, right? Highs and lows, right? Which is the important parts of the market, right? Okay, so we will see what everything we will do. Maybe I will these latest last two I will maybe touch just a little bit, and then we take them into the details in the next webinars, right? So who are the market participants, right? If you think about it, who could be that, right? So basically it's a hedge funds which are trying to make profits. Many people might think that the hedge funds are actually those who are controlling the markets, moving the price, but it's actually not a really true. The hedge funds are basically the companies which are taking the money from the investors and trying to make profit. They doesn't always make profits. They sometimes, and quite often, they lose also, right? Then there is multinational companies which are coming to the forex markets for the hedging currency risk, right? So it's for example, who could this be, right? McDonald's, right? International company. They have they have restaurants around the world, so they need to operate with the many currencies. So they basically hedging the markets, right? So, and it's all other companies like this, right? For example, Coca-Cola or whatever, then us retail traders, we are trying to make profits also. And then some pension funds, big banks, central banks, and then there is this a CLS company, right? So basically all of these are meeting on the markets, and they are trading somehow the currencies. We will be talking mainly about the currencies. And as you can see, here is a lot of fines which has been given to the big banks, right? To these to those who are trading, So here, for example, 6 billion fine, right, in 2015 for the manipulations, here Barclays, Citibank, JP Morgan, UBS, RBS, Bank of America, right? So basically all of them are cheating on these markets, right? And now we've been thinking that all of these companies are coming to the markets to trade, against each others. Well, it might be true in the past until the CLS company has came into the place, right? So who is this CLS? So let's go to the next slide. And here it is. So basically, the CLS company, which is a company for the continuous link settlement, right? That's a company which actually puts all these banks, which you can see some of them in here, right? You can see there's really those big ones, right? The Citibank, right? Barclays, UBS, Unicredit, right? All big world banks, HSBC, ING, Goldman Sachs, right? So why all of them? Why would they trade against each others, right? Why would they come to the forex markets and trade against each other? It would not be that much smart, right? So why would they do it, right? When they can just trade against us, against those hedge funds, and against those others, right? So these banks are doing really shadowy game, and they are now using this CLS company, which is privately owned company, probably by Rothschilds. No one knows who's own it. And they basically incorporate all the big banks together. They collect the orders from all the participants, and then they found the liquidity on the markets to proceed with the net positions, right? So just to show you, I want to play for you one video in here. Give me just a second now. I will play that for you. What's happening? All right. So I want to play this short video, which is actually about this company. I'm not sure if you will be.
Time and time again. First, they each send their payment instructions.
Hello.
We aren't the only two institutions trading today, though. Our payment instructions 24 hours a day. At midnight, before the start of the session.
This company is operating in the specific times, which we will be using then later for our trading.
We issue an initial pay-in schedule so both members can review their net pay-in totals. A and B's funding requirements are multilaterally netted down by approximately 96%, and for some members, further still, use additional liquidity tool in-out swaps. At 6:30 a.m., we issue a revised pay-in schedule that specifies the minimum amount that must be paid in by set times. Spreading the pay-ins over a number of hours minimizes the draw on liquidity. At 7 a.m., each member begins paying the required currency amount, either directly or through a Nostro agent, in which they hold foreign currency at other banks. The system takes each matched pair of payment instructions in turn from the settlement queue and checks whether they satisfy the CLS settlement risk management tests. Using our unique payment versus payment system, the relevant payment instructions are then settled simultaneously in real time and with finality and irrevocability, and the associated long balances are paid out to both members. The settlement process continues until around 9 a.m. when a settlement of approximately 1 million payment instructions, totaling an average of 5.
Yes, this is important. So what they're basically doing, they trade over 5 USD trillions of the market on the markets, right? So as the forex market has probably a volume around 6 trillions, so this company basically owns the most of the volume, right? They basically move the markets, right? Also, this is very important these times. This is a European, Central European time. This is when they do settlements. So what does it mean? Between the banks, they collect the money, and then around 10, 11, they deploying it into the markets, right? Then the markets finding the liquidity. So this is basically the just, I will probably stop the video in here. It was just to show you what is that, right? So you can actually go to the Google and you put a CLS Forex and you will find that company, right? So yeah, they basically doing these things, right? And let me switch this again. Sorry. All right, so we are here, right? So yeah, so good. They trade 5 million, 6.1 trillion. But how does it help us, right? So maybe you're now thinking like, okay, you're giving me some information in here, all right, but how can I make money on this, or why it is important, right? So basically, as they are trading the huge operations, right, over 5 trillions, they cannot just simply press buy or sell as we do, right, in our MT4 platforms, right? They always need to find liquidity to fill these large orders, right? That's not that easy for them, right? So that's why the market sometimes is moving in the range, right? Then it's doing some different thing. Then it moves opposite, then it wants to move, right? But I will explain this, right? So they have to follow specific protocol, which is, as I was saying right now, accumulation, manipulation, distribution, right? So that's why sometimes it's market boring, because they are accumulating the positions. If they buy all at the one time, they will simply shoot the price up, right? So they need to be hiding what they are doing, right? So why is that important for us? Because it leaves specific footprints on the markets, like caught imbalances and the gaps, right? And also they are operating in the specific times, which is as well important for us, especially for me. I trade only in the specific time. I don't like to watch the market whole day, because I want to trade when this company is trading, right? So these operations can be done only with the specific market mechanics, right? So I will explain you right now in the moment. And here it is, right? So basically they are delivering the price, right? So here is couple rules. If you can screenshot this, or you can rewrite it down, or rewatch the webinar then again, right? So as I just explained, right? So they are operating in the specific protocol, which means that basically they are accumulating price before they move it somewhere, right? But they never move it just from the consolidation somewhere, right? What they mostly do is a accumulation, manipulation first. So basically, we have a accumulation phase where they are slowly moving the markets, right? Creating the interest on the both sides, right? Trying to trap traders into the false breaks, right? And then mostly price dips below before it goes higher, right? Why is this happening? Because they basically doing a consolidation, then they're doing expansion and a reversal, right? So in here, they are actually buying in the stop losses, right? So we basically, they need to follow these rules, right? So price, as they drive the price always goes from the consolidation to expansion, right? It can go from the consolidation, from the expansion to retracement, right? So we have a consolidation, we can have expansion, right? We can go from expansion to the retracement. Price can go from the expansion to a reversal. So it can be expansion and a reversal. Price can go from expansion to the consolidation, right? So basically we can go from consolidation, expansion, consolidation, right? And now this is important. Price never goes from the consolidation to reversal, right? So if the price has been consolidating, then it go to expansion, consolidation again, it will not reverse down from here. If the price drops below this consolidation, this is what? This is expansion, and then it can go from the expansion to reversal. So then it will moves higher again, right? Also, price never goes from consolidation to retracement. So we know that that from here, let me draw it this simple scheme again, right? We have consolidation, expansion, consolidation, and price never goes from consolidation to reversal. So that means that the price will not reverse down here, right? So that's why we not short here, never. And also, it never goes from consolidation to retracement. So there never will be just retracement to to retracement, right? So if this happen, if we have this price moving like that, then we can be sure that if the price drops lower, it will be just a manipulation to take price higher again, right? Maybe now this looks a bit confusing for you, but later I will show you on the charts that it makes perfect sense. And if you just apply these into your tradings, and also you apply my rule, which I have said in the previous webinar, which is never buy low, never sell high, and never sell low and never buy high, right? So if you think about this makes perfect sense, right? So if you have, again, you have consolidation, you can have expansion, then you have again consolidation, right? And then price drops lower, and you have rules: never sell low, because price never goes from the consolidation to the reversal. Also, price never goes from the consolidation to retracement. So that's just a manipulation for the continuation higher, right? So how the reversal can happen right now in here? So price can go from the consolidation to the expansion, as we know. We can go from the consolidation to the expansion, and we can go from the expansion to the retracement. So if we have consolidation somewhere on the top, we can have expansion and then a retracement, right? And again, if you think about it this way, you have accumulation, manipulation, and then distribution, right? So maybe if you see this first time, it makes a little bit confusion, but let me explain in here. So here is two expansion scenarios, right? So we have a accumulation, right? Then price drops lower, which is a manipulation, right? Then we have break of the structure, retracement, and price continues higher, right? So it's actually perfect accumulation, manipulation, distribution scenario, right? Or we know that if we have a continuation pattern, which is actually the expansion or retracement, expansion, then we have a consolidation, and then we know that the price cannot go from the consolidation to the retracement or the actually reversal. So you can see here on the bottom, this was just touched, right? Maybe someone sold here, was trapped, and you know that you have expansion or retracement, expansion, consolidation, and then has to be again expansion, and then could be a reversal, or if it is not reversal, then it's just a retracement, and then could have be again the expansion, right? So this looks maybe a little bit confusing, but you just need to practice a little bit, and this will make sense, right? So yeah, here are the rules, right? So don't trade when the price looks like it's delivering consolidation to reversal, right? So if we have a consolidation to reversal, right? For example, price came here, right? We have a consolidation to reversal. That's the mistakes when what happens here, right? Traders sell the breakout in here, and then they are perfectly stopped out, right? So you can see that the price drops, but it never drops down where the sellers has entered it, right? So basically you enter the sell, or first you are stopped out here, or if you have stop loss higher, it will not come back into your positions and will not give you a chance to get out and moves higher, right? Again, so that's basically the basics, and this is actually a set accumulation, manipulation, distribution concept, right? So this concept actually is playing on the markets during the day and week, and there is what is important is time and the open of the price, right? So this is how it looks. It could be any time frame candle, right? Because price is fractal, and this could be any time frame, but we will look at this on the weekly, for the weekly use, and also for the intraday, right? So the bullish bias manipulation occurs below the opening price, right? So this is a bullish scenario, this green one, right? And we have opening price of the day, right? What is before the market is opening before the day? There is always the Asian session, right? So what we have mostly in the Asian session, there is not much movement, right? Price is mostly doing a accumulation, right? Then we have a expansion, manipulation, right? That's where the low of the day is created. This is mostly during the London session, mostly around between 8 to 10, latest 11 o'clock Central European time. Then when the price breaks back above the daily open, we got a expansion, right? Then the price creates high of the day, and then it makes some pullback and you have a close, right? Then again, we have for the bearish scenario, we have again Asian session, which is from the 10 p.m. To the midnight, right? And then the price opens, right? In here, you have manipulation. Price drops below the opening price, and then you have expansion. Then mostly during the New York session, 2 o'clock, price makes a pullback to some nice level, and then continues lower, and then it closes, right? Also, this can be used on the weekly profile, where actually the function of the Asia is on the Monday, right? So basically we have a Monday, and what mostly happening is we have some range created on the Monday, then the price drops below the Monday's low, which happening mostly Tuesday, Wednesday, and then the rest of the week we have a expansion. I will show these charts, these on the charts. You will be amazed what you will see, because I believe that for many people the charts looks like a random things which doesn't make sense, but it's actually making perfect sense once you learn these things, right? And again, for the bearish case, we have also again we can have here is a weekly open, right, which is on the Sunday. Monday creates some range, price create manipulation above the high of the Monday, and then it distributes lower on the next days, right? So basically in here on the Tuesday or Wednesday, there is on the lower time frame, you have perfect entries which you can enter with a nice quiet risk reward, right? So basically if you entering above the open of the weekly, you will be entering on the wick of that weekly candle, right? But it depends obviously on the what time frame you trading, how long you are able to hold the trades. Now I will show you a scheme of this CLS company, right? So here was those times what they are actually doing, and this is what I use for the day trading, right? So here is described their operational time of this core settlement service in the Central European time, right? It's not too much important to understand all this time, but basically what they are doing is here, and look how these times perfectly match with the sessions which you probably know from the markets, right? So at the 10 o'clock, the instructions and input matching is starting, right? So that's the time when these big companies, these big banks are actually giving instructions for the payments and inputs and matching for the next days, right? So they're giving the instructions, and already in here is starting this Asian session, right? In here at 6 o'clock, it's handshakes. It's called handshakes. So it means they basically agreed with all of this what they did in here, and also here is a bilateral deadline line. So 6:30 already this CLS company knows what each bank, each of these 5 trillion participants wants to trade on the markets. And what they do basically, let's say here is a subject A, B, right? And there is another, I don't know how many hundreds of the subjects, right? So one wants to buy a euro, another one wants to sell, So what they basically do, they do net settlement between them. They do it in the book, and then the rest during the next day, they basically distribute it into the markets, right? So these distributions and these, so here, as I said, sorry, here starts these inputs and matching, right? Then they have it. And then in here, in the first 2 hours of the day, actually from the 6 o'clock to the 9 o'clock, it starts these settlements, right? And pays in. So everyone who makes some instructions, they need to pay, right? So they need to give the money to the markets. And then when it is done, this completion, which is around the 9 o'clock, right? Then the pay in, pay out process starts and starts the distributions, right? So what actually we know, what we said, that this CLS company is doing, and they following this process, what they're doing, right? So if they're doing some consolidation and then they want to buy, they drop the market, right, below these lows to, I don't know if they're doing it on the purpose, but or maybe traders don't know how to trade. People start to trade, sell, right? And we know that they're basically looking for the liquidity, right, to distribute the price, the market somewhere, right? Also, as we know that we, after the consolidation, we don't have reversal, we don't have retracement. It can be only the expansion to the reversal, right? So this is kind of a pattern which I am looking for on the markets. It's that simple. I tell you one thing, I actually trade almost 10 years, and I've been trading market profiles, supply demands, some drawing trend lines, rectangles, or these things, that things, trying to many complex things. And this is actually the most simple way, right? This is basically all what I do. I have Asian session, I have dropped below the market. Now this is important, write this down. 10 o'clock, which is the time when they complete this target, and funding, it's in the 10 o'clock, right? Between this window, they're doing that manipulation, right? So they have accumulation, then they do some manipulation, and here on the 10 o'clock, mostly low of the day is created. 10 o'clock Central European time, low of the day is created, and it starts, right? It sounds easy right now, but I will show you it's really that easy, right? So yeah, here again, this is this accumulation manipulation concept, right? Again, I will repeat that. And let's look at it, right? So we have Asian session, mostly consolidates, and it can have a, right, so it consolidates. Then during the London, it has an expansion and the reversal in the London session by making high or the low of the day between 8 to 10:30. But mostly this low comes at 10 a.m., right? Then we have a expansion, right? Then small consolidation could be, right? Expansion, New York retracement could be between 2:30 to 2:30 p.m. And then it could be again reversal, if the high time frame levels are reached. And then it could be again expansion, reversal, right? And then again consolidation, right? So that's the profile of the day, which repeats. Not every day. I cannot say that it would be very easy if this happens, right, every day, right? It's not happening every day. For example, today we had today's market was looking like consolidation, expansion, retracement, expansion, right? And now it reached the level, and now we have, from this expansion, we have a reversal, right? I will show you. So yeah, so this is basically, as I said, it's not happening every day, but it's happening more often than not. And if you're following 3 to 4 pairs, which I'm looking for, the Euro USD, GBP USD, and USD franc, because these 4 are traded during the London session most, you will always find it on at least one of them, right? So here, just to show that I'm not saying something which I have just created for myself, right? So as I said, here we have highlighted a Asian session, right? In here we can see that it was a day when we basically had a expansion, reversal, right? Consolidation, expansion, then again expansion above a liquidity, a reversal, right? Then price coming into the what? Into the Asian session. In the Asian session, we have a consolidation, then price moves above and then is distributed, right? Again, let's look another day. We have a Asian session, accumulation, manipulation, distribution, right? Another day, we have accumulation, price dips just a little bit above it, but it was in there, right? Accumulation, manipulation, distribution, right? Then pullback in the New York, continuation of the distribution, right? Another day, we are looking still on the Euro M15. Accumulation, manipulation, right? Which is actually the expansion, reversal, right? Let's look at another day. We have accumulation, manipulation, distribution, right? Let's look another day. Accumulation, manipulation, distribution. And another one, accumulation, manipulation, distribution, right? And again, right? So I mean, it's not something, accumulation, manipulation, distribution, right? So it's still repeating. It's always there. It's always has been there, right? And once you learn it, you really will be able to take amazing trades. I want to show you just this one, which is a trade which I have traded yesterday. And right now, I think it's a time to a little bit look into this trade, right? So again, we had a repeated pattern, right? Which we had a accumulation during the Asia. It's small window in here, but the accumulation was already created from here, right? Then we have a dip below it during the London, right? Manipulation, and then I was expecting a distribution, right? So let's look a little bit into the charts right now, and let's go to the Euro, and let me bring it to that trade where it was, right? So it was actually in here, right? Let me hide this so we have a little bit cleaner chart. Give me a second, right? So I can do it. So it doesn't matter. I need to close this. All right, so I will explain you this trade, which was taken from here yesterday, right? So we always need to put everything, these things which I have showed you right now, yes, they are happening there. As you can see right now, with this without any annotations, without putting the time, without knowing when is the Asian session, market looks like it's random, it's really messy, doesn't make any sense, right? So let me just right now put Asian sessions, right? So we can see how the market is behaving, right? So again, you know, it's still there. Accumulation, manipulation, you know, distribution. In this case, you would not be completely correct, but you could take a trade from here down to here, right? That would be still nice trade, right? Again, in here, accumulation, manipulation, distribution, right? Again, even though if you not completely right with the market direction, you still could be able to take a trade in here, right? Targeting just the highs above in here, right? So it's all still possible. But let me explain you the trade which I have taken yesterday in here. Give me just a second. I need to remove all these Okay. All right, so it's clean now. And now I need to again open my pen so I can draw. All right, so let's go to the 4 hours time frame in here. I do not want this, right? And here is a euro, which actually nicely has traded from here, right? We are might now thinking, okay, so where did it come from, right? Always we need to look left, right? And so I will just zoom it a little bit. And we need to see these things, right? So as I've been saying that we all right now know that these markets are controlled and manipulated and whatever, traded mainly by this company CLS, right? So what they do, if they trade, how do we know that they've been trading, they've been moving the markets and whatever they did? It brings me to the next topic, which is this fair value gap, right? Which is such a candle, which such a long body, right? Where is this gap between these candles, right? Who can make this move? Probably 100% not me or not you by opening 10 lots. This is a billions traded on the markets, right? Mostly when we have a such candle, the price will be sensitive in it, mostly in the middle of it. I think in the middle of it. So if we basically have this and the middle of it, right? So you can see how it can react from here, but also in the where it comes from, right? So we can see the price before it has made this sharp move. There was a kind of a accumulation in here, right? So we have actually accumulation, expansion, right? So let's look where actually was the orders for this move accumulated, right? So basically what these market makers has to do before they shoot the price up, they need to move the price down to buy and then shoot it up, right? So we are always looking for the down candle which has created the low, right? So if we have, let me zoom it also a little bit more. So in here, was it? Yes. So in here, as we have these candles, right, we can see that this down candle wasn't the lowest, but this one was the lowest, right? So from here, I always draw on the close the line, right? And that's where I will be expecting price to react next time, right? So you can see the price has reacted in here. Also, what is important and what they are mostly doing, you can see how the price actually moved from here, right? And then it did not come exactly into the level. It went higher, and it took almost 90 days, right? And again, they moved a little bit higher in here, right? And look what they left in here. Basically, these two equal lows, which is kind of like a double bottom, right? So what's happening in here? The price creates these two equal lows, right? Then it starts to breaks higher. So what's the traders are doing in here, right? So they basically buying in here. They have buy where they put stop loss, right? You might put stop loss below this two equal lows because you think it's a double bottom and the price will not go there anymore, right? So which is basically the false, because this is actually created on the purpose to make the people think that price will not come here, because if they have a stop losses in here, it's a liquidity which these big players are always looking for, right? So yeah, anyway, I just moved a little bit out from the topic. So we have this level, right? And then we are looking how to trade it in here. So let's go 1 hour time frame and let's move back in here, right? So this is this green one. It's that our big level, right? So price has come there down on the Tuesday, right? And then it started to accumulate it. I never like to enter after a such move just to enter and expect the reversal, which actually happened in here. But look, again, here created two equal lows, right? Then the price has been accumulating during the Asian session. It moved a bit higher, right? So those who've been expecting price to go higher, they enter in here because we have double bottom again, right? And what happens then? Price has been manipulated in here and going higher, right? Today we had again Asian session, but price did not go lower, right? It basically continued higher, right? Straight into this order block, right? So again, we can see order block in here where we have the last up candle, right? Before they've been buying into the sell, right? So basically still same trading logic. So here is actually this thing. So I've been looking at the markets as it was in the consolidation, then it has been dropping, and then on that lows around the 10 o'clock, 11 or 10 o'clock, right? Let me zoom a little bit more. And let's see what time the low of the day was created. Right, so the broker time is now 11 is here, right? So it's 11 broker time, but the Central European time it's 10, right? So now we putting a bit pieces of the puzzle together, right? So what we know we do not want to buy what when we have a consolidation. There cannot be a reversal, right? So we know that this is just a trick, right? You don't want to buy here. Also, if you put the rule never buy high, because it's a high of this range, right? You never buy high, right? Then you have a expansion, right? Retracement, reversal, right? Or it can be like this, right? Also, you do not ever want to buy if you have these like relatively equal lows like this, right? It always will be taken in here, right? So that's so we have accumulation, right? Manipulation. Low comes around the 10 o'clock, right? Why? Again, let me bring this. Why the low comes at the 10? Because they have finished this completion and the settlement time, right? That's when the low is coming. You can see low is coming in here, and then they distributing into the markets, right? So that's what's happening. Then actually this kind of process repeats in the New York for the different currencies, and the high of the day comes at 16 o'clock, right? Which would be somewhere around here. You can see it's 17 o'clock of the broker time, but it's 16 o'clock the Central European time, right? So if you don't take anything from this webinar, just remember this, and it will already improve your trading a lot. You never buy high, right? You never buy, you never expect the reversal happening like this from the accumulation. There always will be manipulation. You need to learn to buy low, right? Then low comes at the 10 a.m. or 11 broker time, and in the New York it's like that, right? Also, here it would be a mistake for those who wants to sell here, right? That the price will be dropping lower. Because why? Because after the consolidation we never have a reversal, right? Once the price makes a reversal here, then you have expansion, consolidation. You cannot have a reversal. So if the price will drip lower in here, you can have only again expansion, and you can have reversal, right? So yeah, that's the things which I wanted to say in here, and let me continue in here, right? So yeah, so it's accumulation, manipulation, distribution concept, right? It's working like a charm. Maybe do you want to see more high, lower high? Good question. I asked him. He's in the other. Oh, wait a second. I will just read the questions in here. I suppose this works better and stronger high time frames. Can speaking of session, US session is the best. Yes, US session is, in my opinion, easier to trade because mostly the London creates a low of the day, and the New York session mostly is a continuation, right? So there is a specifics for the each sessions, right? Yes, Central European session. Thank you. High, low, lower, high. Yes, of course, the markets are moving like that also. All right, so let's. Yeah, there is a question if it is possible to trade on the higher time frame. This is true, and let me show you. It's actually what I got in the next slides, right? So here we will look for the accumulation manipulation for the week, right? So here we got actually a Monday, and same, right? We've been using for the accumulation the Asian session. Now it will be a Monday for the swing traders or high time frame traders. Like we have accumulation, then Tuesday we have manipulation, and the low of the high and low can be high and the low depends on the markets. Comes mostly on the Tuesday, and it can be also during the Tuesday, Wednesday, and then the distribution start, right? So we have Monday consolidation expansion, right? Levels are during the Tuesday, Wednesday, where is the forming high and the low of the day, right? Or low of the week expansion. Then we have a small consolidation, and during the Thursday can be created high of the week, right? I am not including a Friday because a Friday, what it could be depends on how the market was traded, right? If the low was a little bit delayed and it was created on the Wednesday, it can be the Friday still can be continuation, right? Anyway, let's look at the charts a little bit. So I have a small chart in here which I will show you. Let me zoom it like this. Maybe I will do it. Sorry. Okay, so it has put me again from the beginning. I'm sorry for that. I will be back there in the second. So it's here, right? So what we got? Again, here is a days on the top right. So we got the Monday, then there is a Tuesday, right? And again, this is a euro. And look how sensitive is actually this Monday range, right? So we have a Monday, which is a accumulation, right? Then the Tuesday price from this low on the Monday, then during the night and on the Tuesday, it goes above it and it tips above this high, which is already that manipulation, and then price distributes, below all these lows, right, where they're looking for the liquidity, right? Again, we have this this is quite volatile week, so you cannot predict really every market, and this is not a goal of every trader to catch the high here, catch the low here, low here, close the trade here, then enter again here, long here. But really, I don't know anyone who's trading like this. If you are able to spot such a repetitive pattern and you can trade it like this once per week, it's already enough. You will be succeeding a lot, right? So let's look another week. We got a Monday range, right, as an accumulation. Then you have a manipulation above the Monday range, and then price distributes below it, right? So you can see again in here how this Monday low was taken, right? And then the price distributes above it, right? So this Monday lows and high is very, very sensitive, right? That's what I always highlight in my charts on the Tuesdays. I always go through all my markets and I look where is the Monday highs and lows, right? So if we look actually into this euro, where I've been looking at this trade, right, you can also see that basically it's happening here also, right? So we have a Monday range, right? Then, we have Monday range, Then we have a Tuesday manipulation, right? Wednesday manipulated this, right? And now the distribution start, right? I believe that we will see price above these highs, right? Could it be tomorrow on the Friday? Yes, possibly, because that's when the low of the week was delayed. It was not on the Tuesday, so the Friday could possibly be retracing, right? But anyway, I will not trade it. Let's look to the pound, and here is one more nicer and more clear example, right? So let's look at it in here, and it was actually this week. So we have Monday range, right? We have accumulation, then we have a manipulation above the Monday range, right? That's where we are looking for the entry, and then we have a distribution, right, for the next days, right? So basically, again, accumulation, manipulation, and distribution, right? If you for some reason don't catch a trade in this and price drops lower, mostly Wednesday is a continuation day, right? So you have actually the chance, you can go lower time frame, and we can see it in here. Let me show it in here. So if you are looking to trade on a higher time frame, you have, right, okay, so you have an accumulation, then you have a manipulation, right? Then we know that the Wednesday is a continuation, and you scale to the lower time frame, and you can see you have a Asian session, accumulation, manipulation, and then distribution, right? So basically, from the fractal on the higher time frame that the price will most likely be doing this, right? And then you can execute it on the lower time frame also, right? So there was two nice possible entries from here, and then from here on this week, right? And then again, you can see price doing accumulation, manipulation, distribution, right? So yeah, so where the pound is actually reacting from in here, also it was if we look at the markets in here, we go to the left, right? Let me hide this. Let me move this here. So again, we have this strong sharp move starting in here, right? Creating these highs, breaking higher. And it was from here where the price actually took this low. You can see it was just a tap into the liquidity and then the sharp move. We look for the latest down candle, which would be this one, right? And now you can see where the price is coming from, right? Then if we look again in here where the price dropped from in here, where this is coming from, right? Yeah, that's these fair value gaps, right? So let me show you. You can see this is a gap where actually this CLS company was trading, right? And these gaps, give me a second. And these gaps are where they have the orders, right? Also, in here, as this was a first week of the month, there is a monthly open price. Let me bring it in here. You can see how this monthly open price has reacted, right? Also, I want to show you one more thing. If you have a candle where was sharp move above, taking out a liquidity, and then sharp move down, if you draw a rectangle in here like this, right, it will show you exactly where the potential entry could be, right? And how you can trade this is if you have this, right, and then this is actually the balanced price range, and there mostly the price will not go easily through it on the first time, right? So basically, if you actually draw the middle of this, if I double click on that, it's showing me this point, which is a middle in here, like this, right? And I put a sell in here, right? And I would be targeting these lows. Then I I could have a beautiful trade, right? So you have confluences like you have this strong resistance created by the CLS. It's a balanced price range. You have this monthly open level also, right? So it's beautiful to trade this like that. Also, if you go, actually, it's still repeating. If you go lower time frame, 1 hour, today where the pound has reacted again, right? We can see where did it go. It was actually for 4 hours, I think. Yes, on the 4 hours up candle, right? You can see. And sorry. All right, I do not want this big one. Yes, like this. You can also see what time the high was created. It's 17 o'clock, right? Which is 16 o'clock, which I told you 16 o'clock. It's created, mostly created the high or the low of the day. And in the morning, it's around 10 o'clock, right? So you can see it's here also. So it's not actually always the rule, but if you focus on that and you look accumulation, manipulation, low probably created around 10 o'clock, it of course cannot be from anywhere. It has to be coming from this structure, which I can explain also, and coming into the higher time frame structure, and 17 o'clock, right? 16 o'clock, the high of the day, and price goes from expansion to the reversal. Or it can be a reversal, which we don't know yet, or it can be actually the retracement to the origin of the move, right? And then it can be also a continuation, right? Just to explain where this low comes from, right? So as we had this higher time frame level in here, then we follow it in here like this, right? So we got actually the break of the structure, right? Where it comes from this order block in here, right? Then we got another break. Sorry, we have break of the structure. It comes from here, right? Then we have another break. Where it comes from, where is the origin of the move? You do not want to enter in here, nowhere in here. You want to see the price comes into the last down candle, which originated this move, right? So it would be this one, right? And you see the price did not reach the lows, right? So the entry could be something like that, basically, in here, right? Potentially targeting the higher this high time frame, right? So yeah, it's of course easy to say it like that. It needs a lot of practice, but it's possible if we follow these simple rules, right? So what's the next? Okay, so yeah, it also can be applied to the month, right? We have the week 1 accumulation, week 2 manipulation, then week 3 and week 4 distribution, right? This is happening, and actually if you put all the puzzle in together, and you will find a entry on the, because you have a accumulation first week, manipulation second week. If you go to the weekly, to the daily time frame, then you have a Monday accumulation, right? Tuesday manipulation, right? So you have a manipulation day in the manipulation week. Then if you are able to enter on the Asian session and the London manipulation and then distribution, you are actually, if you are precise, you can be able to catch a low of the month, and then if you are able to hold it, you will then have those trades where you can enter with 10-20 pips stop loss. And if I say like this, if you have a balls to hold it for another 3-4 weeks, you can have these trades which are making like really big profits, right? This is what makes profits. If you are able to enter with the small stop loss and targeting big profits, right? So again, in here we have actually a January, and we can see here we have a week 1 accumulation, right? In the week 2, the high of the previous week reached, and then price distributes lower, right? It doesn't go above here, right? Touch it in here again, and currently actually the pound is somewhere down here, right? As we are approaching this second month, right? So also, if we can take it even more higher, this can be also divided on the quarters, right? The year has actually the 4 quarters. So it would be, each quarter would have a 3 months, 3 months, 3 months, and 3 months, right? And if you look at the charts, I didn't make examples in here. You will find such repetitive patterns also, right? So yeah. Okay, so right now we will look. I have created some more examples in here. So again, still same pattern. This is actually what I am looking for to trade, right? Always accumulation, manipulation, right? So we never sell like that, right? We're looking for the accumulation, manipulation, and then looking for the distribution, right? So yeah, again, another rule: no rate, no trade, right? So basically, what does it mean? If you have any consolidation, you do not want to enter the breakdown or break high if the opposite side of that accumulation wasn't at least somehow touched like this, right? Because why? Because if something like that happened, that means that the CLS has actually loaded the liquidity for the opposite move, right? So yeah, let's go to the charts a little bit more. And if you have a okay, yeah. So if you have any questions, you can ask right now. So I will actually explain them, or explain whatever you need. And yeah, we are actually already over the 1 hour, so I don't want to bore you with me speaking. And it's actually exactly as I thought, that we will actually don't look today exactly into this fair value gaps, but you have just a little bit. I have just touched this topic a little bit, but it will be important to look at it more deeply and into the schematics and how it behaves and what does it mean, right? So if you have any questions, guys, you can ask right now. And if not, I will continue to the few other slides, which is this one, right? So actually, what is a goal of the trader, right? It's to create a simple system with fixed criteria, narrow it down to each element of the trade setup in order to maximize your odds and favor eliminate emotional based decisions, right? So this is actually exactly the thing which I want to teach you, right? To establish a daily process and a routine which we can stick into it, right? Then the money will comes, right? So yeah, that's why I'm actually doing this thing, always trading same things, looking for the same setups on the each day, on the each time, and it's there or it's not there. Obviously, it's happening that sometimes I basically don't see the market clearly, and yeah, we sometimes lose also. And I got as last time I gave you a homework to create your journal and think about your future. And this for today, I will give you a small homework too. So just think about your latest trades and ask yourself if you ever entered in the accumulation phase, been stopped out, and then the price moved without you, right? So what I mean, right? So basically, price is somehow consolidating, right? It start to move sharper higher, and you enter the long, you put stop loss here, and then price does what? This, and then it goes like that, right? If that happens to you, ever, think about this, right? And think about why did it happen, because and what you did probably wrong, because you probably didn't know these rules which we've been talking on the beginnings, right? Also, try to go backwards in your charts and try to find these accumulation, manipulation, distribution concepts in the charts, and focus on your time frame. So if you want to day trade, try to find a Asian session, which is actually from 10 o'clock, right, to the, let me just check it in here. So in the broker time, it's from the one, I'll take it to the small time frame. Actually, in the future, I will have for you this indicator with the cooperation with the broker. So it's from the 2 o'clock to the 7 o'clock, right? From the 2 o'clock broker time to the 7 o'clock. So in the Central European time, it's from 1 o'clock to the 6 o'clock. So your time, it will be from the midnight to the 5, I think. That's Asian range. Please don't exchange the Asian range with the Asian session, right? With the Asian trading time. Because why Asian range? Why this range? It's because it's the range of that CLS, right? It's this, right? So it's this range which we are looking for. Okay, so try to find this range. Try to look these patterns, right? So you have it a little bit in your mind. If you want to trade on the daily, try to look on the Mondays, right? Manipulation Tuesdays, then distributions. You will be amazed how many times it's actually happening, right, on the markets. How many times and how sensitive is this Monday range high low, right? All right, so let's go back in here. And if you do it for the Asian range, do it for the Monday range, right? So make annotations to the charts also, and put it into your trading journal. If you don't have one, you didn't see the latest webinar, it's very important. I will just repeat it again. Honestly, from my experiences, if I started to journal earlier, I would be much better earlier. So yeah, it will definitely fasten your learning process and understanding your psychology, right? It will helps you eliminate the mistakes, early entries, closing early the trades, from the having a too big targets, right? Or moving stop loss to the break even too early, and also not taking profits, right? So it definitely helps you explore repeating and repetitive patterns, right? So why I'm saying this right now, because you could be watching this webinar right now. Okay, it's fine, everything is nice, and if you don't simply look at this, what I've been talking to you on the charts, you will not remember that on the next week. And if you don't write any news, anything to the journal, you will simply not move forward, right? So anyway, right? So why journal? Because if you trade, you journal, you learn, you analyze, then you adjust it and trade again, right? If you win, you journal and you repeat it. If you lose, you journal, you analyze it. The next time you avoid that loss. It will take a little bit more time. Losses will be always a part of the game. If you miss the trade, you journal and then you analyze it and you catch it next time, right? But if you are not journaling, you will be repeating the mistakes, and mistakes are acceptable when the lesson learned and avoid it next time. But if you are repeating still same mistakes every day in the marketplace, it's crazy. All right, my friends, so that's it. I thank you for your attention, and you can basically see me again on the Sunday, where we will doing weekly outlook analysis, and then Tuesday the plan, the review, and the trade setups. All right. So I hope that it was useful, this webinar for you, that you have learned something, at least that it touched you, kind of. And I wish you the rest of the trading week. Bye bye, my friends.